It's one of the biggest buildups and one of the quickest letdowns in recent media history. CNN hyped CNN Plus as the second coming of streaming and digital. They plan to pump billions of dollars into it, and the likes of Chris Wallace were deemed to be of the biggest stars. It lasted less than a month. And so there are plenty of questions to be asked. One of them is America tired of the CNN brand? That question is answered with a resounding yes by many Americans. The proof is in the pudding, and the pudding is the ratings. And they've tanked from Chris Cuomo's and Jeff Zucker's antics to the likes of Brian Stelter and his fellow CNN compadres and their barrage of left-wing self-righteousness. Americans have shown that their appetite for CNN is dwindling and fast. And the Musk Twitter deal, the way it's been celebrated by some and derided by others, the takedown of woke Disney, America is at a very interesting point of deciding what kind of content to digest and where and how it's digested. Let's bring in my friend, longtime friend, Steve Forbes, a media man himself, to weigh in. He's chairman and editor-in-chief of Forbes Media and co-author of Money, that book right there. Steve, thank you for joining us. Good to have you on. Good to see you again, friend. Good to do TV with you again. So tell us,
Good to be with you.
From a long time journalist and media man who's seen the media landscape shift and move, and where are we in this left, right, center debate on what we want to consume?
Well, I think what you see happening with Netflix, and I think Elon Musk really put it very well, people don't like all this wokey content. Be use a vernacular word, a lot of it's crap. And that's why Netflix is losing subscribers. Yes, the competition is very severe. But when you spend $15 billion, $20 billion a year, and most of that is stuff that people really don't like, you got a problem. So CNN didn't even get off the launch pad because people didn't see anything that was going to be unique, that's something that they would want to pay money down for.
You know, Steve, let's dig into the CNN Plus deal a little bit. You know, so here's what the CNN management before the merger said, that they were going to spend up to $1 billion, launching CNN Plus, and they expected it eventually to be a ratings juggernaut, to take over CNN cable, and people never came out. But did they bail too soon on CNN Plus?
No, CNN has always had the problem from the get-go that when there wasn't a big crisis in the world, their ratings were rather flat. So they made the decision several years ago to go left to try to get a core to keep those ratings up. That was getting a little shop-worn. So they thought with CNN Plus, we can get not only high ratings, but we can get people to pay up for it, put up a paywall, so to speak. And so that's the way they thought they would go. And now they're looking at it, and they're still having the same problem. If there's not a crisis, they don't have much of an audience. And that's why CNN Plus went down so quickly. It was clear with the intense rivalry out there, this thing wasn't going to go nowhere.
Let's turn our focus a little bit to the Elon Musk and the free speech argument. Elon Musk bought Twitter for $44 billion. You know, in the scheme of things, Steve, if this is true and he's bringing free speech back to a substantial platform like Twitter, that's a very small price to pay for free speech returning to the American political debate, is it not?
It is. And the nice thing about Twitter was it was so badly managed over the years that stock has gone nowhere since it went public back in November of 2013, was that it was, by the standards of big tech, a very affordable piece of property. Instead of having to pay billions, which you would have had if you had tried to go after something like Meta or another platform, you could do it for seemingly paltry, and I put quotation marks around paltry, $40+ billion. And I think that the fact that the reaction was so anti-Musk on the part of the left shows he's onto something. People want genuine debate. They want openness. And that kind of freedom we haven't had. But Elon Musk was a one-man antitrust department on the monopoly of information. He broke it up. You know, Steve, breaking it up.
You and I both. I spent 15 years on the street prior to television. Twitter wasn't a good buy at $54 a share, at least from a financial standpoint. It seems this almost seems more like a pet project, a vanity project for Elon Musk. Now, granted, he's worth $250 or $300 billion, depending on the Forbes number. Maybe you can tell us what that is. But so it's not a lot of money. I think 25 billion is of his own. So what, 10% of his net worth, less than 10%. But it certainly isn't a good purchase as far as a financial investment by Musk, right?
Well, a lot of his assets are in Tesla, and that's all about market value. It's not cash in the bank. It's not like money sitting around in Scrooge McDuck's money bin. And so he's had to do some borrowings to make this happen. And I think in terms of valuation, I think he's looking to the future. Yeah, it looks awfully expensive now, but this is about the come. And you look at Tesla. Tesla, by certain standards, has been overvalued from day one. Yet the value of the company has gone up. Sales are about now $80 billion a year. And whatever you think of electronic vehicles, it's remarkable that a guy could start a company and beat the Americans, the Germans, the Chinese, the Japanese, the Koreans in the auto business when it came to EVs, electronic vehicles. And he's putting a manufacturing plant in Germany, where the Germans think they are the kings of auto making. Yeah. So it's a remarkable achievement. So I think it's the future he's looking to, not the value, the numbers of the present.
Always great having Steve Forbes on the show to clear things up. Steve, thanks for joining us.
Thank you. Great to be with you, Eric. Thank you.
You too, my friend. You too.